Have you ever wondered why some people seem to effortlessly accumulate wealth while others struggle to make ends meet? The answer may lie in understanding and utilizing the power of compound interest. In this video, we will take a deep dive into the world of compound interest and explore how it can be used to grow your wealth over time. We will cover everything from the basics of compound interest to advanced strategies for maximizing its potential. But before we get started, let's take a moment to think about what wealth means to you. Is it being able to retire early? Being able to travel the world? Being able to afford the lifestyle you've always dreamed of? Whatever it may be, the power of compound interest can help you achieve it. So, whether you're just starting out on your financial journey or you're a seasoned investor, this video is for you. By the end of it, you will have a better understanding of compound interest and how it can be used to build the wealth you desire. Are you ready to unlock the secret to building wealth? Let's get started. Definition of compound interest. Have you ever heard the phrase, compound interest is the eighth wonder of the world? It's been attributed to Albert Einstein, and it's not hard to see why. Compound interest has the power to turn a small amount of money into a significant sum over time. But what exactly is compound interest? Simply put, it's interest that is earned not only on the original amount invested, but also on the accumulated interest. In other words, it's interest on interest on interest. Here's an example to help you understand. Let's say you invest $1,000 at a 5 annual interest rate. After the first year, you would have earned $50 in interest, bringing your total investment to $1,050, investment to $1,050. But with compound interest, in the second year, you would earn interest not only on the original $1,000, but also on the $50 of interest from the first year, bringing your total investment to $1,102.50. As you can see, the power of compound interest is in its ability to grow exponentially over time. Now, let's compare compound interest to simple interest. Simple interest is interest earned only on the original amount invested. So, if you invested $1,000 at a 5 annual interest rate, you would earn $50 in interest per year, and your total investment would be $1,050 after a year and $1,100 after 2 years. As you can see, the difference between compound interest and simple interest is significant. In this chapter, we've just scratched the surface of compound interest, but I hope you can already see how it can work wonders in growing your wealth over time. Stay tuned. In the next chapter, we'll dive deeper and explore how compound interest works in more detail. The power of compound interest. By now, you should have a good understanding of what compound interest is and how it works. But do you know just how powerful it can be in growing your wealth over time? Imagine you are 25 years old and you decide to invest $5,000 into a retirement fund that earns a 7 annual compound interest rate. By the time you reach 65, your investment would have grown to over $150,000. That's the power of compound interest. Now, imagine you wait until you are 35 to make that same investment. Even though you're investing the same amount of money at the same interest rate, by the time you reach 65, your investment would have grown to only about $70,000. That's the difference just 10 years can make in the power of compound interest. The key to unlocking the true power of compound interest is to start early and let it work its magic over time. The longer your money is invested, the more time it has to grow. And as we've seen, even small differences in time can lead to vastly different outcomes. But the power of compound interest isn't limited to retirement savings. It can also be applied to other types of investments such as stocks, real estate, and even savings accounts. By understanding and utilizing the power of compound interest, you can potentially achieve financial goals that you never thought possible. Now, let's compare the power of compound interest to other investment options. While other investment options such as property or stock may provide higher returns, they also come with higher risk. The beauty of compound interest is that it is a relatively low-risk investment option that can provide significant returns over time. In this chapter, we've just begun to explore the true power of compound interest, but I hope you can already see how it can be a powerful tool in growing your wealth over time. Stay tuned. In the next chapter, we'll delve deeper into how you can maximize the power of compound interest, strategies for maximizing compound interest, The first strategy for maximizing compound interest is to invest in a diversified portfolio. Diversification means spreading your investments across different asset classes such as stocks, bonds, and real estate. This helps to minimize risk and increase the potential for higher returns. Another strategy is to reinvest your interest and dividends. By reinvesting your earnings, you are allowing them to compound and grow, rather than taking them as cash. This can significantly increase the potential for compound interest to grow over time. You can also maximize compound interest by investing in tax-advantage accounts such as 401, KES, and IRAs. These types of accounts offer tax benefits that can help to increase the potential for compound interest to grow. It's also important to monitor your investments and make adjustments as necessary. This means regularly reviewing your portfolio and making changes to ensure it aligns with your financial goals and risk tolerance. Lastly, consider seeking professional advice from a financial advisor or a wealth manager. They can help you create a personalized plan and provide guidance on how to maximize compound interest and achieve your financial goals. In this chapter, we've just scratched the surface of strategies for maximizing compound interest, but I hope you can already see how important it is to have a plan and make informed decisions when it comes to investing. Remember, the power of compound interest can work wonders, but it's up to you to make it happen. Stay tuned. In the next chapter, we'll delve deeper into the role of time horizon, taxes, and risk when it comes to compound interest. The role of time horizon. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Time horizon refers to the length of time that you plan to invest for. The longer your time horizon, the more potential there is for compound interest to grow. For example, if you invest $5,000 at a 7th annual compound interest rate for 10 years, your investment would grow to around $9,254. But if you invest the same amount of money at the same interest rate for 30 years, your investment would grow to around $58,971. That's a difference of $49,717 just by extending your time horizon by 20 years. It's important to keep in mind that while a longer time horizon can potentially lead to higher returns, it also means that your money is tied up for a longer period of time. So it's important to find a balance between your time horizon and your financial goals. It's also important to note that as you get closer to your investment horizon, it may be a good idea to shift your investments from high-growth options to more conservative options to protect your gains. In this chapter, we've just begun to explore the role of time horizon when it comes to compound interest. But I hope you can already see how important it is to have a long-term perspective when investing. Remember, the power of compound interest is in its ability to grow exponentially over time. Stay tuned. In the next chapter, we'll delve deeper into the impact of taxes on compound interest growth. The impact of tax on compound interest. When it comes to taxes and compound interest, it's important to understand that taxes can eat into your returns. The more taxes you pay, the less your investment will grow, and the longer it will take to reach your financial goals. One way to minimize the impact of taxes on compound interest is to invest in tax-advantage accounts such as 401, IES, and IRAs. These types of accounts offer tax benefits that can help to increase the potential for compound interest to grow. Another strategy is to invest in tax-efficient investments such as index funds, which have lower turnover and produce fewer capital gains, which means less taxes to pay. It's also important to consult with a tax professional to understand how taxes apply to your specific situation and to make sure you're taking advantage of all the tax benefits available to you. Compound interest and risk. When it comes to investing, risk and return are closely related. The higher the risk, the higher the potential return. But with compound interest, there's also the potential for lower risk and higher returns over the long term. For example, if you invest $5,000 in a low-risk investment such as a savings account earning a 2 annual compound interest rate, your investment would grow to around $6,207 after 10 years. However, if you invest the same amount of money in a higher-risk investment such as the stock market earning a 7 annual compound interest rate, your investment would grow to around $10,129 after 10 years. It's important to find a balance between risk and return when it comes to compound interest. While higher risk investments may have the potential for higher returns, they also come with the potential for greater loss. Low risk investments, on the other hand, may have lower returns but also come with a lower risk of loss. One strategy for balancing risk and return is to diversify your portfolio. Diversification means spreading your investments across different asset classes such as stocks, bonds, and real estate. This helps to minimize risk and increase the potential for higher returns. It's also important to monitor your investments and make adjustments as necessary. This means regularly reviewing your portfolio and making changes to ensure it aligns with your financial goals and risk tolerance. Real-life examples. Let's start with a story of a young couple, John and Jane, who decided to start investing in their 20s. They invested $200 per month into a retirement fund, earning an 8% annual compound interest rate. By the time they reach retirement age, their investment would have grown to over $1.02 million. That's the power of compound interest. Now, let's take a look at a real-life example of how compound interest has helped a business owner, Tom, to achieve financial success. Tom invested in stocks and real estate and reinvested his dividends and rental income. As a result, his investment grew exponentially over time, and he was able to sell his business and retire comfortably at the age of 50. Another example is of a young woman, Sarah, who decided to start investing in her 20s. She invested $200 per month into a savings account, earning a 2% annual compound interest rate. By the time she reaches age 65, her investment would have grown to over $250,000. She was able to use that money to pay for her children's college education and her retirement. We've explored the power of compound interest and the importance of starting early, the strategies for maximizing its potential, the role of time horizon, and the impact of taxes on its growth, and the relationship between compound interest and RIP. We've also seen real-life examples of how it has helped people achieve financial success. We hope that this video has given you a better understanding of compound interest and how it can be used to achieve your financial goals. Remember, the power of compound interest is in its ability to grow exponentially over time. The earlier you start, the more time your money has to grow, and the more time you have to make up for any mistakes or setbacks. But the power of compound interest isn't just about the numbers. It's also about developing good saving habits and financial discipline. It's about setting and achieving your financial goals, whether it's retiring early, traveling the world, or affording the lifestyle you've always dreamed of.